Maji moto. Equities, fixed income, currencies, commodities, and of course derivatives. Welcome to Markets Today. I'm your co-host George Bodo. My co-host Mbide is taking the afternoon off. We have a lot to discuss today, a lot of analytical discussion. We are focusing more on free trade. Nigeria has just announced that it will join the Africa Continental Free Trade Agreement in the next AU meeting. Nigeria has been a heavyweight that has been waited on to join, especially after Kenya and Ghana and South Africa joined. We will be discussing the impacts of this. We will also be tackling the broader issue of free trade movement in Africa, especially focusing on both tariff and non-tariff barriers. We have with us Abraham from Miradi Capital, and he will be delving more into this and also expanding our discussion to understand other issues that are attendant to this, including open skies, free movement of people, what the impacts could have if we roll out some of these policies in Africa. But before that, we also are looking at some of the news that's up so far. We have about 30 minutes to market close. So far, turnover appears to surpass yesterday, just shy of about 600 million shares in total turnover. Safaricom trading just above 13 million shares so far, and usual equity and KCB dislodging yesterday's top movers, which was led by Britain. Some of the free news you're following up today includes the FX market updates. We have seen some strengthening of the Kenyan shilling against the USD, and primarily because the central bank came in and began withdrawing liquidity from the market using via the open market operations. And the key tool they've been using over the past couple of days is what we call the term auction deposit, which has a tenure of 28 days. And just to show you how the market is super liquid, the 28-day TAD has been yielding about 5%. That's how much the market is liquid. Ordinarily, TAD 28-day should actually yield at about CBR, which is about 9%. We also look at following some other initiatives that the central bank is doing to help the shilling claw back some of the losses. We are not aware that the central bank has done the FX sales, but we're following such news. We keep talking to treasurers across the banking sector to give us some more information. But so far we know that the central bank has not sold any FX in the market. Typically, in a scenario where the Kenyan shilling is weakening against some of the foreign currency images, the central bank has always tended to come in the market to sell foreign currency, because ordinarily it's a demand-supply equation. So the weakening primarily on a day trading basis is all about demand outstripping supply. So central bank sometimes comes and props up supply via foreign currency sales. Some of the other news we're following in the market is the fact that the derivative launching yesterday. One of the latest news we woke up to is the fact that this NSE has stripped off Kengen and Bamburi from the single stock index. Initially, they had proposed 7 stocks, which included Kengen and Bamburi. The latest update that they've been removed off the single stock futures. We saw yesterday that there were initial trades. Yeah, remember yesterday was a soft launch. There was a trade on EABL and Safaricom, but we'll continue to monitor today. But just remember that next week is a full launch. Yesterday was a soft launch. We will actually have someone next week to talk to us more about derivatives on the NSE platform. We take a short break, look at the commodity prices, then we'll come back, we get to discuss with Abraham on issues to do with free trade, free movement, tariff barriers, non-tariff barriers. Big news, Nigeria joining the Continental Free Trade Agreement. See you shortly.